Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, July 1st, 2020. I am Frank Ochoa, aka PivotBoss, and before we get to the ES here, I do want to invite you to join me later on this afternoon for the PivotBoss monthly market outlook at 4 p.m. Central Time, 5 p.m. Eastern. I will host the monthly market outlook from our PivotBoss trading room, and it will be in the community room, which is free to everyone who wants to join. You can go to pivotboss.ecofin.co right here, pivotboss.ecofin.co, and you can join for free and jump into the room later on. As a matter of fact, you can jump in anytime today as you want. I look forward to seeing you later on this afternoon. All right, let's take a look now at the ES here. You'll notice with the ES, the previous session had a pretty solid finish to the day. We obviously had a squeeze early in the morning. We talked about watching the previous high here for rejection, because if there was strong rejection, we could get a pullback as deep as the mid and perhaps become a bearish outside day. But above 30.50 would open up the upside back toward 3100 and 3150. So that's the real resistance zone up here. That's the one that's significant. And we talked about before that this market continues to have a very bullish overall trend, right? Trend is still intact. You can see the upper line up here, and right now we've kind of done this, which typically precedes the market doing this. So we've talked about the seasonal tendencies in our trading room here heading into July. We'll talk about that more in the monthly market outlook later on this afternoon, but the seasonal tendencies for July are quite strong, followed by the seasonal tendencies in August, which tend to be quite weak. So for the most part, we have a pretty good upside follow through that could happen here if price can continue to hold yesterday's midpoint, which is 30.65s. Call it 30.60. That's a key zone there. We could drop as deep as that, but definitely bulls need to come in and defend above 3100. Starts to open up a return back toward 3150 and perhaps through that zone. All right, let's take a look here at the NQ. You'll see the NQ right now on the pullback phase as well this morning, already starting to see signs of a bounce off this low. Again, yesterday's midpoint here is 10.055. The 10.054 level is the FOMC key level, and we've been kind of chopping around that level. Remember, we got an initial sell-off away from that level. I mentioned whenever you get a rejection after the first move, you tend to snap back to that level. It snapped back right to it, and since then it has really chopped, right? This expanding wedge here, which means we're on the upswing right now and could easily take out June's high here early in July. Any pullback, even as deep as this 9,800 level here, could still be a buying opportunity for a continuation higher until proven otherwise. And failure to hold 9,800 on a daily basis would be significant to the trend. Okay, let's take a look here at crude oil. You'll notice for crude oil here, we've gotten a bit of selling pressure that has come in here, at least over the last hour of trading, or at least since early pre-market. And what that's led to is a kind of a failed high here of prices above 40 yet again. Right here, got above 40, rejected. Came back toward it for a retest, rejected. Prices above 40 here, rejected, and now again pushing above it in early trading here, and now seeing at least some early forms of rejection. Now this market has been bullish, and every attempt to get into the PIMA trigger zone has still been defended for a continuation. Right now, yesterday's low was right in that area. We called 38.86 as where that 8-period average was for support, and the low of the day ended up being 38.85. So I mean that was pretty much it, and it bounced. Today, there it is again. Today's low is 39.05, and the actual average here is 39.09. So for the most part, it continues to honor that 8-period here on a short-term basis. But with the failed high here and being below yesterday's midpoint, if it can't hold 39, this could easily turn into an bearish outside day with a shot to return again back toward recent support between 37 and 37.5. So right now, showing early signs of weakness. But if this thing can find a way to get back through 40, it opens up some upside here that takes us into 42 and beyond. All right, let's take a look here at GC. Now, gold futures here has been very, very strong. We talked about the recent breakout here and how this looked a little bit different than what we had seen before inside the range. This could be the beginning of what may trigger a continuation toward 1831 and 1957. This push to new highs came just shy of 18, and then the pullback here, and just ahead of the pullback I mentioned, right, 1750 to 1760 needs to hold. It did, and we've had a great bounce and already taken out yesterday's high, which is also last month's high. And now this could lead to an early pullback this month, but we still have an uptrending market here, higher value relationships. So this could drop back again into this pink zone here, which is the pivot range for a shot at continuing higher down the road. But you still need to hold 1750 overall for this thing to extend to the upside. But right now, looking very strong, but we could still see a pullback that gets us going to the upside at some point. All right, that is it for now. Again, please join me later on this afternoon at 4 o'clock p.m. Central at pivotboss.echofinco. We'll be hosting that live session in the Pivot Boss community room. Everyone have a fantastic trading day, and I will see you in the trading room. Take care.